welcome to the Business Standard Morning Show. I'm Kanishka Gupta. It's the 22nd of January 2024, and here are the questions we will be answering today. What does Ayodhya mean for the future of religious tourism? Will the interim budget further boost welfare expenditure? Should you join the rally in Ayodhya related stocks? And what is CAT 3B landing system? All eyes are on Ayodhya today. The Ram temple is all decked up, waiting for the consecration ceremony by a battery of priests led by the elderly Kashi Acharya. Prime Minister Narendra Modi is the judgeman or chief guest at the event, which will be witnessed by millions. And many of them will soon embark on a journey to seek blessings from the deity. The tiny temple city will soon turn into a mega pilgrimage spot. But what does it mean for the future of religious tourism? Ayush Mishra finds out.
It was a cold and foggy night of December 22nd, 23rd, 1949, when a 9-inch metal idol of Ram Lalla made an appearance under the central dome of the then Babri Mosque. Civil suits followed, and after over 70 years, it culminated in the corridors of the Supreme Court. Today, on January 22nd, 2024, when a 51-inch tall Ram Lalla idol is being consecrated by a group of priests led by 86-year-old Vedic scholar Pandit Lakshmikant Mathurnath Dikshit in the presence of Prime Minister Narendra Modi and over 7,000 others, believers call it homecoming of the deity. And Ayodhya, with a grand Ram temple at the epicenter, is in the midst of a major facelift. From a small rundown town, it is set to become one of country's biggest religious tourism spots. The city, which has over 5,000 big and small temples, mostly dedicated to Lord Ram, is expecting over 4 million tourists a month. In contrast, its population is just over 3 million. The city is now expanding to house a new airport, a grand railway station, and scores of real estate projects. Roads leading to it are being widened, and airlines are adjusting rosters to divert more flights to the temple city. Online travel company Make My Trip has claimed that global Ayodhya searches have jumped by over 1,800 times, and the company has also claimed that it has recorded a 97% growth in searches for religious tourism.
The whole world is looking towards Ayodhya, talking about Ayodhya. It's ultimately going to be akin to what Vatican City is, what Mecca is for people. And I'm sure we will be treated at the same level in times to come. I think, it's going to greatly add to the tourism sector, making it one of the biggest growth drivers for improving tourism in the country.
After the pandemic, Indians are traveling like never before. While some are heading to the lap of nature to find some solace, others are looking for spiritual comfort. In 2022, the contribution of India's travel and tourism sector to India's economy was worth 15.7 trillion rupees. And data released by the World Travel and Tourism Council says that by the end of 2023, it was expected to be worth 16.5 trillion rupees. The overall Indian tourism market is projected to achieve a compound annual growth rate of 7 to 8%. Religious tourism, meanwhile, is expected to grow at a much higher trajectory of 9 to 10% over the next 5 to 7 years. Data released by the Ministry of Tourism says that pilgrimage tourism earned 1.34 trillion rupees in 2022 as compared to 65,070 crore rupees in 2021. It was a sharp 93% jump. Reports also say that 1,433 million domestic tourists visited places of pilgrimage in India in 2022. It was a 60% jump from 677 million in 2021 when pandemic was on peak. Capitalizing on the trend, tour operators too are offering packages to religious sites. And now, Ayodhya will give a big boost to India's spiritual tourism. Experts believe that there will be spillover too, as tourists coming to Ayodhya from far south or from outside the country are likely to visit Kashi, Haridwar, Mathura, and other religious spots too.
We believe that this segment itself is going to increase by 3x, about 300% in next 1 to 2 years, given the options, given the infrastructure push that has come from the government around, let's say, the lot of corridors, the revamping of the temples, the new temples like Ayodhya coming up. Religious tourism is bound to go at least 300 to 400% in next 1 to 2 years as far as India is concerned. The Ram temple, the way it has been built up, what it does is it will not only boost the spiritual tourism, the people who are only going for religious purposes. What will also do is that people who are only going for, let's say, holiday and leisure will also start including Ayodhya as one of the destination to be included as part of their holiday itinerary. Now, what it does is it's not only for a particular specific reason for the religious purposes, but now for the holiday leisure seeker, let's say students who want to, let's say, go for some experience and adventure tours, they will start including Ayodhya because of the Ram temple and the infrastructure created around it.
Anirban Sengupta of 2Hub, which is a B2B platform focused at the travel and hospitality industry, believes that Ayodhya will usher in an era of structured development in religious spots.
Because a couple of things will happen. The first thing that will happen is the whole religious tourism or spiritual tourism, whichever way you look at it, will have a structured development. All this while, I don't think it was in a structure. People were just going and visiting, religious places. There will be a structure, there will be development, there will be branded development that will happen, because around most of our religious, apart from, say, Amritsar or something, most of our religious destinations did not have branded inventory. I think that will happen. Flight connections will improve. So there will be a lot of focus, which will allow growth to happen, number one. The second thing that will happen is, because of this focus, there will be, it will also attract international tourists. Uh, our expectation is Ayodhya may become what a Vatican is to Christianity. So Ayodhya may become that for Hinduism.
Budget hospitality chain Oyo has announced plans to introduce 400 properties in key spiritual destinations like Ayodhya, Varanasi, Tirupati, and Katra Vaishno Devi by the year's end. The government, meanwhile, is leading from the front. It has launched several projects such as Swadesh Darshan Scheme, Prashad, Dekho Apna Desh, Adopt a Heritage, and extended e-visa to 171 countries along with visa-free rationalization to boost tourism. Prashad is possibly the most important of those initiatives. Under the Prashad scheme, 41 religious sites were identified from across 25 states for development. But what will be the challenges that will have to be overcome to meet the projected growth in spiritual tourism?
Connectivity is the challenge, because if you pinpoint all of these areas which is focused on religious tourism, are not well connected. Infrastructure is an issue. Inventory of hotel rooms or is an issue. Also, there has to be a lot of tourism friendliness, which needs to be provided, because all this while the purpose of traveling there was primarily religion. Now you're adding a bit of tourism flavor to it. So are the people sort of geared to manage this kind of demand? Does it have enough orientation of how to manage international tourists? So those kind of challenges will be there. But as I said, I mean, it's the step in the right direction. As demand comes in, I'm sure we will figure out how to manage it.
Most experts agree that the Ram temple will not just give a fillip to Ayodhya's economy, but also to that of neighboring districts. Country's overall religious tourism will also improve with the momentum created by UP's Temple City.
After the temple inauguration, the next big event that will be keenly watched is the tabling of the interim budget. General elections are near, and there are expectations that the government may loosen its purse strings for welfare schemes. even as Finance Minister Nirmala Sitharaman has ruled out any such spectacular announcements. In the third edition of our special series on interim budget, Bhashwar Kumar speaks to experts to find out if welfareism will indeed get a further boost. And if yes, will it impact fiscal discipline? Let us listen in.
The announcement of Interim Budget 2024-25 on February 1 will likely see the central government give another boost to welfare expenditure while still sticking to the fiscal consolidation path.
My reading is that the interim budget will probably focus more on enhancing the outlay or allocations for the existing welfare schemes rather than introducing some new schemes for the poor or the underprivileged sections of society. So I would say that yes, the government will be focused on the welfare schemes in the interim budget, but that will be more by way of enhancing allocations for those welfare schemes and not introducing new schemes.
Business Standards individual Dhasmana agrees that with elections approaching, the government will focus on welfareism in the upcoming interim budget. He also points out the fiscal consolidation challenge this will pose for the government.
The Modi government is likely to weigh economic costs of various social welfare schemes vis-a-vis their political benefits. Modi has already said that for him, 4 castes in India are farmers, women, poor and the youth. So there is likely to be enhancement in allocations for PM Kisan, various women schemes, pension for unorganized sector. Already the government has extended free food scheme for poor for the next 5 years. But enhancement of these schemes, the government will keep in mind fiscal math. They are likely to peg fiscal deficit somewhere around 5.2% of GDP. Nominal GDP growth is likely to be pegged at 10 to 10.5% in the interim budget, over 8.9% which is likely in the current financial year. 5.2% fiscal deficit of this would mean fiscal deficit of less than 17 trillion, which this means that fiscal deficit will be pegged lower than the current financial years, even in the absolute terms. So the government will have to curtail growth in capital expenditure. Capital expenditure grew by around 37% in the current financial year. This much hike won't be possible this time, and it could be around 6% or so, which was packed in the interim budget for 2019-20.
The centre's post-COVID-19 fiscal consolidation plan calls for reducing the fiscal deficit to 4.5% of GDP by FY26. News reports have already emerged about the schemes that Dhasmana believes could see increased allocations. According to reports, the government could increase the allocation under the Pradhan Mantri Kisan Samman Nidhi Yojana or PM Kisan scheme. The allocation per farmer could increase from 6,000 rupees annually to 8,000 rupees. The government could also increase provisions under the PM Garib Kalyan Anna Yojana and is considering raising the minimum pension amount under the Atal Pension Yojana, its flagship scheme for unorganized sector workers. One government official told Business Standard that a decision was likely either in the interim budget or outside of it. Also, the government is reportedly working on doubling the insurance cover under its flagship Ayushman Bharat health scheme to 10 lakh rupees, with an announcement to this effect likely to be made in the interim budget. While A.K. Bhattacharya agrees that the interim budget will make higher allocations to finance the enhanced welfare measures listed out by Dhasmana, he emphasizes that provisions will have to be made for the extended free food grain scheme in particular. In November, the Pradhan Mantri Garib Kalyan Anna Yojana, the free food grain scheme, was extended for 5 years at an estimated expenditure of 11.80 trillion rupees. Both Bhattacharya and Dhasmana's assessment is also backed by foreign brokerage firm Jefferies, which has projected that the government will focus on boosting welfare spending in the upcoming interim budget. Excluding subsidies, the brokerage anticipates a 7 to 8% rise in the government's social spending in FY25 compared to 3% in FY24. While Dhasmana has already outlined the fiscal implications, enhanced welfare spending will also have an effect on how the government raises revenues.
Certainly, if the government provides more allocation for these welfare schemes, there will be some pressure on the revenue side. So it is likely that the government may increase allocations for the welfare schemes in the interim budget. Remember, it is being presented before the elections. But to finance those enhanced allocations, the government may indicate that what kind of non-tax measures are going to be taken in the year that is coming ahead. It could mean higher privatization, more disinvestment, asset monetization. On taxation side, I would say the government will not make any major announcements. There may be minor tweaks here and there. But as I said, that taxation revenue also relies a lot on the prevailing buoyancy of tax collections. So I think they will rather depend on tax buoyancy instead of increasing or lowering tax rates.
For its part, Jefferies does not expect immediate tax hikes for raising revenues amid increased welfare spending, but measures such as higher capital gains tax are possible after the election. The brokerage also sees a potential increase in disinvestment after the polls. Business Standard's A.K. Bhattacharya concludes that the government will not compromise with its fiscal consolidation plan even as it increases welfare expenditure.
Financial market too is eagerly waiting for the interim budget. It has its wish list ready. But right now it looks like all the roads are leading to Ayodhya. Hopes of a tourism-led economic boom have also seen stocks of travel and hospitality companies shoot up in recent weeks. So should you join this rally or wait as valuations may test the optimism? Harshita Singh brings a report.
The recent euphoria leading to the inauguration of Ram Mandir in Ayodhya has also gripped the Lal Street. Investors have recently poured into several stocks across tourism, hospitality and travel businesses in Ayodhya, which is gaining popularity as a new investment theme. Reports estimate a daily footfall of up to 3 lakh visitors in coming years, making Ayodhya a significant tourist attraction. While the recent traction has been sentiment-led, analysts expect tourism-related demand to remain buoyant beyond the Ayodhya event.
Basically, if you have seen post-COVID, the demand has really picked up. So travel and tourism as a whole sector is doing very well. There were a couple of events which were lined up last year, like World Cup was there, the G20 was there. The buoyancy would continue even beyond Ayodhya because the demand is very resilient. Even the managements across the industry, they have been highlighting that the demand is structural in nature and it's not completely driven by these events only.
On the bourses, small cap stocks like Praveg, Allied Digital Services, Apollo Sinduri Hotels, Pekka and Genesis International have shot up in the past 1 month. For instance, Praveg Limited, which is engaged in event management and tourism, surged 87% before pairing some gains recently. This rally, analysts note, has made valuations expensive. On a trailing basis, some of these stocks are trading at PE multiples as high as 127 times.
While appreciating the long-term potential of investment in this theme, investors should not go overboard chasing these stocks at elevated prices. Many stocks in this segment have run up too much too fast. This is a sentiment-driven rally triggered by retail exuberance. Broadly, the valuation of the mid and small cap segments are too high, unjustified.
The recent rally also suggests a large part of anticipated gains has already been priced in. Analysts thus suggest avoiding fresh buying.
Investors are eyeing potential opportunities arising from the increased tourist inflow and infrastructure development in the region. However, a granular stock-specific analysis is crucial to navigate this event-driven rally. It is essential to assess whether valuations have already surged to levels that may not be sustainable beyond the event hype. These stocks are now trading near the 5-year high PE ratios, indicating that the market has priced in a significant portion of the anticipated gains. Considering the current market sentiment, investors should exercise caution and avoid making fresh positions in these stocks.
The opening of Ram Mandir is likely to present several opportunities for investors in the long run. However, cautious stock-wise evaluation is crucial in the near term. Today, on January 22, equity markets will remain closed.
He's making plans for an early retirement. Business Standard.
An IMD forecast says that Ayodhya is likely to be sunny today during the inauguration of the temple. But rest of the North India is still reeling under fog and cold wave. Hundreds of flights have either been cancelled or are being delayed at the Delhi airport, which will soon open its second CAT 3B runway. But what is this landing system? How does it help aircraft land during foggy conditions? Ayush Mishra finds out.
More than 75 flights were running late and at least 5 were cancelled at Delhi's IGI airport on Thursday. And the situation is likely to remain the same for the next few days. Flight operations in advanced countries too are affected badly due to fog or snowstorms. And this is when technology comes to rescue. When the visibility falls below 600 meters due to fog, the airports activate low visibility procedures or LVPs. Under this, the air traffic control and pilots use maps and visual communication to maneuver aircraft on the taxiway. The queuing of aircraft on the runway is not allowed to prevent an accident, and it is the main reason that leads to delays in flights. And airport also use instrument landing system. It enables planes to land in dense fog and adverse weather conditions when visibility is severely limited. The Instrument Landing System or ILS is a ground-based radio navigation system that assists pilots in low visibility landings, particularly in dense fog, comprising a localizer and glide slope components. It furnishes information on both horizontal and vertical axis, enabling precise aircraft positioning on the runway without visual confirmation. Instrument Landing System issues warnings for deviations from the center line or improper altitude during landing. Modern aircraft feature advanced avionics, autopilot systems, and radar altimeters, improving accuracy in foggy landings. These technologies reduce dependence on external visibility. ILS approaches are defined by precision approach categories. Delhi's Indira Gandhi International Airport boasts an advanced anti-fog landing system, the CAT 3B Instrument Landing System. The CAT 3B system facilitates precise approach and landing when the runway visibility is no more than 50 feet or 15 meters, and the visual range is below 200 meters, but not less than 50 meters. The entire procedure is automated with a voice providing prompts including a countdown indicating the distance to the runway, instructions for flap deployment, and cues for brake application. The latest addition to airports featuring CAT 3B technology is the Netaji Subhash Chandra Bose International Airport in Kolkata. Establishing the complete CAT 3B system at an airport may entail an initial cost of up to 10 crore rupees, with a monthly maintenance cost reaching around 50 lakh rupees. The installation cost for the CAT 3B system at Calcutta Airport amounted to 130 crore rupees. Airlines need CAT 3B certification for aircraft and pilot training, limiting non-compliant flights in foggy or low visibility conditions. Major Indian carriers supporting CAT 3B include Vistara and Indigo. Even with technological progress, a pilot's expertise remains essential for ensuring safe landings in situations of low visibility. Pilots must navigate through complex information presented by cockpit instruments in foggy conditions.
the nation's trusted bank, SBI, the banker to every Indian.
Delhi Airport has 4 runways and 2 of them are Cat 3B compliant, and there are a total of 6 airports in India which have Category 3 instrument landing systems. Well, that is all for today. For more news, views and analysis, please log on to business-standard.com.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.